Hi, I'm Peter Rose, founder of Longwood Currency Trading. How to exit a Forex position successfully. Now, you wouldn't think that that's a really big deal because you just get out, right? You'd think that the complexity of the process of trading would be entering the trade at the right point so that you get the position moving, because if you don't get the position moving in the direction that you want it to, you have very little problems with exiting because you get your stop hit, right? When I looked at the complexity of the Forex market, and if you know my story, I listened to all these people that are teaching quote educational stuff about Forex, and I believed it. I believed what they were talking about because I came out of 40 years of investing in real estate, and if you ask somebody a question about how to do something, the information that they gave you was the straight scoop. And that's not the case in Forex. And if you've been trading for any period of time and you've been watching these videos of people talking about how you should trade, then I'm sure you've suffered the same problems that I have. Maybe you don't realize it, but your problems in trading have nothing to do with you. They have to do with the education that you're consuming. In any event, I believed it. I funded my account with $45,000 after a couple of mini accounts and stuff. I'm not crazy. But I thought I understood that, and I lost $40,000 relatively quickly. And I said, I'm not really stupid. What's going on? And I stepped back from it. I looked at the market, and I used my software engineering background because I was a software engineer for 33 years. What's the problem? Well, I was trying to solve the wrong problem and using the wrong tools and all that other stuff. I took my remaining $5,000 and I doubled that in about 4.5 months. And I said, okay, this is the problem we're trying to solve. There's 3 parts to that problem, 3 phases that go through. I called it the life cycle of a currency position, which is a rip on the software engineering concept of the software development life cycle, the SDLC. The life cycle of a currency position is solving the problems of entry analysis, position management, and exit methodology. And I put exit methodology in there because it is a problem in the solution of the life cycle of the currency position. And as much weight as is devoted to entry analysis is devoted to position management and exit methodology, because they're equally weighted problems. You need a solution to each one of those problems in order to successfully proceed from your analysis of the situation through until the conclusion of the position. If you don't lay that out, if you just take these things as individuals, oh, I'm going to enter the trade because it's Tuesday and it's sunny, and so I'm going to go in and enter the trade, and when it hits the 55 period moving average, I'll get out as my exit point. What do you do in the meantime? Oh, I'll add more lots. These phases of the life cycle of the currency position, it's not stuff you do. They're stating the problems of this overall problem of what's called the Forex market. How do you solve that problem? You solve it like you solve any other problem, which is found in the software development life cycle. You do this analysis, and you wireframe, and then you do this, and you iterate back, and then you go forward. It's a very complicated process in software engineering. But at the heart of it, it's breaking whatever problem it is that you have up into small pieces, figuring out what that small piece, what's the problem that small piece constitutes, what information do I need for that piece to solve the problem, and what information do I spit out of that in order to benefit the next solution piece. And then how do I hook those 2 pieces together? That's problem solution. I don't see that being taught anywhere because I don't see good educators out there. I see maybe people that got lucky and they're trading a big account, and they'll tell you when they make $20,000 on their 500 to 1 leverage, but they don't tell you when they lose $30,000 because that doesn't count. Because they've got a $300,000 or $400,000 account that they lucked their way into at that high leverage, so they can lose $30,000 and then they can replace it. To them, it's a constant process. If you have that much money to deal with, then even if you're relatively stupid, you can make that work. The problem is that you don't have a lot of money. You're trying to pay your light bill and get your life stabilized so that you can then start laying some money away and building wealth management in your life instead of just working your job and paying your light bill, and at the end of the month counting up the $280 that you have left over. And you know, I'm not talking shit here. The average 65-year-old today has a savings of about $125,000. This is the end of June of 2024. So you're 65 years old, and your savings for retirement is $125,000. I mean, that means you could take out maybe $4,000 a year, 4% withdrawal rate. So $400 a year, a little $5,000. Okay, $400 a month, and the average Social Security is around $1,500. Okay, so you got around $2,000 of income. You're making $50,000 or $60,000, $70,000 a year now, and now you're down to $23,000 a year. How do you make that work? In an economy in the United States where $1,800 a month rent that's pretty standard, unless you're living out in the boondocks somewhere, and then you might be able to find a $700 a month apartment. We have to really look at not only solving the problems of the currency market, but we have to, what's the problem of life? What are we trying to do? We're trying to work hard, save money, make that money work for us so that we have two streams of income, our job income and our investment income, going together to culminate in when we have enough money that we can pay our expenses, live comfortably, and still have a little bit of money left over so that if the market goes south or we have medical expense. You know, my wife just had a nail in her tire, and it's one of these all-wheel vehicles, so she's down trying to see if we can, well, we had a new set of tires put on not too long ago, so we think we could just put one tire on. It'd be a couple of $100 to put one tire on. But if that's not the case, because it's all-wheel, she's looking at $600 or $800 to replace all four of those tires. Where does that money come from? Because we're not working. So there's planning that has to go in to all these little problems that come up. Even your deductible on your health insurance becomes problematic if you don't have a good alternate plan to just your Medicare. But you're not thinking about that. You're just thinking about going out clubbing. That's fine, go clubbing. But you need to solve these problems so that you can always go clubbing. Because wouldn't it be terrible to like clubbing, and then when you get to be 60 years old, you go, oh shit, man, I can't go out and drop $200. And my wife and I just went out with friends to have dinner on the water at a little restaurant, and it was $90 for my wife and I to have dinner. We didn't even have. We just had one glass of wine and a dinner without entrees and all the other stuff. It was really hot out, so we didn't want to eat a lot of food. Otherwise, we'd have been $150. $90 just to have dinner. I'm sorry the thing went like this. I just kicked the table. We're outside today, and it's cold, and it's damp. It's been raining all day, but it's a great relief from the heat that we've had. We were over 90 degrees, 96 degrees, 98 degrees, and the humidity was high. We had that for like 3 days. It was pretty rough. Where we live, on a little mountain in New Hampshire, in the Lakes region of the United States, temperature has now dropped from 95 degrees during the day to, it's a relatively chilly 53 degrees right now. But you have to plan for that. That's why I have a long sleeve shirt on. I'm not very planning oriented by sitting out here in the cold, but I enjoy listening to the rain and just being able to sit outside from the winter. That's planning. Each phase of your trading needs to be identified, and you need to put equal weight into how you solve those different problems. And so the solution to the final solution to the life cycle of a currency position is, how do you get out of the trade? But it isn't so much how you get out. How you get out, you hit the button and you're gone. But when do you do that? Are you going to stage out of the position? Are you going to get out of the position after a percentage gain? Are you going to get out of it as a dollar gain? Are you going to get out of it as a pip gain? Are you going to get out based on a signal of like a golden cross, short MA, cross, long MA? Are you going to get out because it's Tuesday? Are you going to get out because you have to take a crap and you don't want to let the position ride there? Are you going to get out because of some economic news that's going to be released, or you got involved in an NFP release, price has been volatile, and so you're gauging when the volatility is going to slow down and you're going to exit your trade? And I could go on for 15 other reasons. So exiting the trade is not a trivial concern. So, I mean, I'm not going to go through 42 different solutions to exit theory. I have one rule. It has two conditions, and it's really simple. It wouldn't be any good for me to tell you what that rule is, because unless you have the background of the full life cycle of a currency position, it would be no more helpful to you than some of the other shit that's out there that you're consuming. What I'm suggesting to you is put down all the shit that you're listening to on these videos and solve the problem. Identify, I need to exit this trade. When am I going to exit the trade? Am I going to exit the trade if it doesn't perform right away? Am I going to exit? Well, I've been through all that. I'm not going to do it again. When are you going to exit that trade? What conditions need to be satisfied? When we're looking at entry analysis, I've discussed this many times, my entry rule has, you hear all the traffic going by, they're logging trucks that are going by and utility vehicles and everything. We have quite a few houses being built down the road from us, and so there's a lot of activity. It's exciting that a lot of people are recognizing the beauty of this area, and they've chosen to buy land and to start building. We have a 5-acre zoning for building, and sometimes you get a 2-acre thing. But there was about I think it was 110-acre parcel that was just sold a couple of years ago. They're now starting to develop that land. There's a 90-acre parcel on the other side of me, south, and that was just sold, and they're just starting to clear that land. So you got these big logging trucks that are going by. So I'm doing these videos outside over the last year, and you hear these trucks roaring up and down. Peter, you live on a mountain in New Hampshire. It should be remote. Well, it is remote, but people are trying to build new houses, so it's a little noisy. But we just have to get along with that. A little noisy listening to the rain, but that's okay. Those are situations that we put ourselves into, and we mitigate whatever risks that's involved by just simply understanding what's going on. So when you look at your exiting process, what are all the reasons? You need to write these down. What are all the reasons or situations that would cause you to either choose to exit a trade or that the trade needs to be exited? Now, those are two separate major categories of exit theory that you need to break up all your reasons to get out of the trade, or methods of getting out of the trade. By methods, I mean, are you going to stage out? Are you going to wait till you get a retracement back. Like it's sometimes in a breakout situation, the price will break out through, and you'll take that initial trade. But you know that in Forex, you are always going to get a retracement back to that break period. There are reasons for that. So understanding that, you figure out what your break is. You get out at the top, reverse your position, ride that down, get out of the trade, and then if it's going to continue on, you get back in. If it isn't, it's going to pop, and then you get back in. That isn't scalping. That's day trading and taking advantage of order flow. Guys, it's going to be really difficult for you to identify these exit methodologies or reasons why you would exit if you don't understand order flow. Order flow is the dog in this, not the price action. The price action is the result of the order flow. Okay? So you gotta figure out what the dog is in any problem that you're trying to solve. You don't try to solve the tail. You got to solve the dog. Speaking of the dog, maybe you've seen Bo do. Hey, Bo, can you get up? Come here, come here. He doesn't want to get up. He's waiting for Sue to come home, and he's glad he's not out in the rain. She took him for a walk today in the woods, and it was raining, and he came back soaking wet, and so he's comfortable on the floor. Can you have a position that's open and be comfortable with the knowledge that you understand the conditions that would cause you to want to get out of that trade, and when would you execute those conditions? That's getting out of a trade successfully. You need to understand what those exit conditions would be. When do you exit? I mean, are you going to do like I said, the golden cross? You're going to do it on a percentage of profit basis? Are you going to do it because it's Tuesday? What are the reasons that you would want to get out? How are you going to get out? In other words, are you going to stage out, or are you going to go out in a lump, or are you going to go out on a volatility spike? What are you going to do? And when are you going to do that? What are you going to do? How are you going to do it? And when are you going to do it? Those are the three elements of a rule. That's how you build a rule. Rules are condition based, and they're based on what do I need to do, how am I going to go about it, and when do I execute that rule? How do I put all those pieces together? It's not tough. All you have to do is answer those three questions. What do I need to do? How do I do it? And when do I do it? And you have to understand that each phase of the life cycle of a currency position, entry analysis, position management, and exit methodology, have to answer the rules that you're going to build, have to answer each condition within that rule, has to answer the three what, when, how, and when in order for that to be valid. And you have to understand the difference between conditions that are sequentially mandated as opposed to random conditions, which then bring on, as I've said in other videos, too many permutations to consider. If I have two conditions as to whether I should exit a trade or not, I really have four choices to make. I can have condition A by itself, I can have condition B by itself, or I have condition A, B, and I can have condition B, A. So from two conditions, I have four choices that I could make. That's a permutation. If I have 5 conditions, I have 325 different choices that I could make. It's too complex. That's a permutation series. You don't want your conditions and your rules to be permutation based. It's too hard. You want conditions that are sequentially based. If this is true, good. If the next condition is true, good. If the next condition is false, I'm out. I don't do whatever it is that the rule is based on. Those conditions have to be sequential. It's like stopping your car when you're driving. You pick your foot up, you push down on the gas pedal. You can't push down on the gas pedal until you pick your foot up. You don't push down on the gas pedal until you see the stoplight. I mean, there's conditions that are met in order for you to do anything. If those conditions are non-sequential, you're going to have a tough time solving any problem. Okay? I don't mean to give you a course in probabilistic math here, but and statistics, but it has a lot to do with how you're going to be able to successfully exit that position that you're in. Peter Rose, Longwood Currency Trading. Have a great day, and have a great trading day.